Okay, everyone, let's continue with our first panel here of day 2. This is the future of digital banking. One thing I love about these panels is bringing together people of very different backgrounds, different parts of the FinTech family and finance family, if we wish to call it that, and it's very much reflected in our panel here today. Starting on the far side, happy to welcome back Steve Bowers, FinTech Development Manager at CFC, who joined us for a keynote yesterday. If you didn't see that, do make sure you catch that up on the app. Also with us, Sarah Kachansky, CEO at FinTech Wales, Olivier Seri, Global Head of Digital Solution Sales at G&D, and closest to me, Slava Garag, Global Head of Payments at Wirex. One more round of applause for our panel, please. I thought the pause would have done enough for that, but not quite. Anyway, right, let's press on with our first panel here, the future of digital banking. And the first question, let's make it a nice broad one, because as I said, we've all got some very different areas of expertise. And Steve, if I can kick things off with you, obviously you're coming to this from a more insurance sort of perspective. For you, how has digital banking really evolved over the last decade? There's been so much change, and what are the most significant changes you've seen from your perspective?
I think there's sort of 3 key areas that we can maybe look at for where it's evolved, and the first is going to be account opening. That has just become so much easier, so much more streamlined. Gone are the days where you have to go into a branch and sit down and open a bank account. So that's probably the first one. The second is going to be in the payment space, so peer-to-peer payments. That landscape keeps on changing, as we speak, and that's been a huge change, a huge shift from where we were 10 years ago in that respect. And then the final one I'd probably mention is bill paying. Direct debits and standing orders seem to be a bit of a thing of the past now. From an insurance perspective, we've seen huge shifts in exposures around technology and technology working properly, but also in the cyber landscape as well. Fintechs are inherently processing a lot of customer data, so the data landscape is completely different as well. So they're probably the key areas that I'd focus on.
Yeah, I mean, I can talk about it from a slightly different perspective. So my current role is as CEO of FinTech Wales, which is a membership organisation for fintechs. But prior to that, I spent 15 years in industry, largely working as a consultant and helping my clients understand the fintech landscape. So my perspective on it would be we've kind of seen the competitive landscape completely change. So you had the regulation that came in that enabled all these new banks to get off the ground, made it much easier to enter the banking industry here in the UK. And then what we've seen over the last sort of 10 years or so is the markets start to consolidate. So you've got your 3 big names, you've got your Monzo, you've got your Starlings, you've got just Revolut, just a bank. And then you've got, the next layer down, you look at people like Tandem. And then what you've seen at the very lower end, the bottom end, I think, is we're starting to see more and more consolidation for some of those organisations that maybe haven't stepped up to being full banks and have remained account providers. So the most recent one we saw was Pocket acquiring Moneys, both of which have been around for quite a while. And I think, from a landscape perspective, that's been really interesting to see the kind of the industry stretch out, and you have these big names come to the top, and then you kind of have a tail down.
Yeah, indeed. Yeah. I think the G&D in a setup perspective, we see that, as you were saying, the onboarding, the speed of doing everything is the relevant factor. I mean, digital banking has made things so much easier for us. Sometimes too easy, so you have to backpedal and put a bit of friction back somewhere for security purposes. But also the aggregation. I think you're getting more and more elements, more and more actions under the same roof. Some people call it wallets, some people call it super apps, and that's really the evolution. And you'll see a bit of a battle of the wallets, because at the end of the day, they have become so easy to use for us end users, and so relevant on the overall global market, working everywhere. That's pretty much the main trend.
Yeah, I think I would only add to here that the first major shift that happened is that regulators started to think about banking differently. They added these new EMI things, and it's across the board, in all the countries. I think that's the first biggest shift that happened on the regulatory side, and it should continue, in my view. Yeah.
Obviously, blockchain is something that we do have to discuss at some point. So let's talk about that now. That was I think it was the hype cycle to end all hype cycles when it came to blockchain. Well, till AI, I suppose that might have topped it. Who knows? Let's start with that though. for you, how is blockchain being integrated into digital banking services? I know this is only relevant to a couple of you. Slava, if I can start with you on that. For you, how do you feel that's being integrated? What's the future of that? Where do you feel that sits now?
Well, I think we can look at this from three major angles. One is payments as a first, right? So if you look at what's going on right now, Visa, MasterCard, for example, they continue to experiment in this area by doing the stablecoin settlement between the institutions, between the acquirers and issuers, for example. You've got thousands of merchants now accepting crypto, which is another interesting thing right now. So if I'm not wrong, it's already 60% of the biggest merchants that process more than 1 billion, they actually confirm that they want to accept crypto just because it's a new acquisition tool for the users. That's one thing. Obviously, DeFi as the second biggest thing that is happening in the digital era. So what is in DeFi? Mostly it's peer-to-peer lending, for example, right? It's all these smart contracts things that you can easily navigate into through any bank, actually. That's a major shift as well. Last but not least, the new investment things like ETFs recently been implemented on a global level, and it continue to go. It's like 900 different ETFs already there, plus maybe coming to thousands already. These three major angles that is shaping the digital banking in the future.
And Steve, if I can come to you on that quickly.
Yeah, I think we have the benefit of working in insurance. We look at hundreds of submissions a week from all around the world, which helps us really identify where trends are coming from and what new fintechs are really doing. And what I would say is, back in the crypto style boom that we had a few years ago, we saw loads of people trying to adopt blockchain technology, but it's just dropped off a cliff massively now. So from where we were a few years ago, it makes up a very, very small percentage of what we see. So I don't know if anyone on the panel maybe has some reasons as to why that might have tailed off a little. But yeah, just an interesting fact that we've noticed that it's not as prevalent as it once was.
I think it was a technology solution looking for a problem, and there weren't many problems that it could solve that weren't already being solved in less complicated ways, would be my perspective, the way I see the market.
Yeah, that's one of my quotes of the day already. That will go on the range of branded mugs that we may or may not be launching at the end of the event. I mentioned AI a moment ago, and we spent a long time on that yesterday afternoon, so I don't want to spend too much time on AI. But for all of you, how is AI transforming customer interactions and banking operations? So it works from both directions here. Let's look at some examples. Sarah, if I can start with you. You work with a huge number of fintechs in Wales, lots of different examples, I'm sure. What would you point towards?
I think the first thing is that when people talk about AI, they need to understand what they mean by AI. Like, AI is a huge range of technologies. And if you look at the financial services industry, some parts of it have been using AI for a very long time. Fraud detection, robotic process automation, it's been happening behind the scenes. It's just not been particularly, sexy. So what is happening now is it's come back up to the top. Like, I've seen this hypercycle before. So I think, the examples where it's been used historically are becoming more widespread, as I said, particularly fraud detection, particularly with sort of, behavioral analytics. The more payments go online, the more, technology solutions need to move faster to keep up with fraudulent actors. The LLM piece, I suspect, is where you're going with kind of customer interaction and customer service. I have seen many chatbots in my time, and none of them very good. The hope is that perhaps with the advent of LLMs, some of those chatbots can achieve the dream, which has been to make the customer service agents more efficient and more effective at their jobs, and therefore able to spend an hour and a half with you who has a really serious problem and not spend an hour and a half helping Olivier reset his PIN. So I think, it can be helpful both on the direct-to-customer channel, but I think also helping the customer service agents, literally go through the huge reams of paperwork that they have sitting behind them. They're desperately trying to find the answer to your question because I don't know it all off by heart. That's a really interesting use case that we're starting to see. But at the same time, I would just, re-emphasize, AI is not one thing. AI is many, many things, and any organization that wants to implement AI has to get to their own definition first. What do we mean by this? What problems will it solve for us?
Definitely, yeah. I think it's a good point. We have been in the fraud in particular, been using the term machine learning was not sexy.
Yeah.
Let's call it AI. This is saying things better now.
Yeah.
Obviously, it's much stronger, but that's still the one protecting us on a daily basis. So all the big engines from the domestic network, from the overall networks are using AI, and they've been using AI for at least 15 years. I think the structuring of data is one thing. So that's really where we see the actual benefit of this technology. That's in the back. When you talk about the front, I think what we've seen today, obviously the chatbots and that's all, the interface is nice. I think the better usage, from my perspective, is when it helps people integrate into the digital world. So if it's the dev people creating some fast videos to share content, it's making the digital banking more accessible to the wider audience, because there's still a lot of people that don't want to get on the train. And also making certain process faster. If I could tell you a small story. Now we have at the G&D a solution that uses AI to create a visual on the card. The visual on the card usually takes quite some time because it needs to be approved, needs to think about, tell something and so on. Now we have a solution that you can just put a few items you want in the list, and the machine will create a visual for the card. And if you like it, you just hit the button, and we'll print it in the factory and send it to you in the mail. So I showed that to my my daughter, 17-year-old daughter, and she's like, you look at it. She likes to draw. She's pretty good at it, and so I was like, you look, we've got this new tool now. She says, yeah, Dad, but that's not what I want. It's what I want is for AI to do the boring stuff, so I can do the cool stuff. This is doing the cool stuff while I have to organize my room and do my work and pack my stuff. I want the AI to do this shitty things, and so I can actually draw. So you got a point. But at the same time, when we were doing a visual with a financial institution, with the FinTech anyway, that was taking a month. So now you can get your own visual with your own rights, rather connected to that, in seconds. So that's nice, it's a goodies. It's 1%, 2% of the actual mass of cards we are doing. Maybe I will be using that, but I think this is a usage that is creative. So my answer to my daughter was actually say, you're good at it. You could do your own design. I'm really drawing like a 5-year-old, still. So I wouldn't do my proper design on the card. So I'm happy to have these tools to do my own card. She would want something better, obviously.
I would also, maybe just to summarize what Olivier said and Sarah, I think the biggest thing in AI that actually can help in digital banking is a cost cutting. Starting with obviously customer support. We, for example, at Wirex, we easily replace a lot of work done by legal, now done by AI, quite a lot. Support, obviously, yes, marketing is a huge stuff. So fraud management, just what Olivier mentioned as well. So fraud management, risk management, there's a lot of interesting tools we utilize by AI as well. But I would like also to highlight there's a flip side of the coin. The one is it's not really reliable. So you always have to double check. You always have to do maybe even sometimes more work than actually you would done that originally yourself. So you have to be cautious. It's still early stage of implementation into the real work.
Yeah, and to that point, I mean, we're seeing a lot of AI risks at the moment, from AI financial advice within banking to AI trading. And when we're underwriting that risk, we're really looking at the quality of the AI and what actually is going into creating that AI algorithm. That's a real key point of what determines our appetite for that risk. Speaking of risk, it isn't without its pitfalls. AI bias is a huge thing that we have to be aware of, and as well as the liability arising out of incorrect AI. Banking is dealing with people's money, and if an AI bot automates an investment that loses that person money, what's the knock-on effect? Could that individual harm themselves? So the landscape from a risk point of view is huge, and maybe not something that comes into the forefront of everyone's mind.
One thing I will just stick with briefly on that question, and it's something I mentioned yesterday, my very scientific way of judging the room and what people are thinking and talking about is the things that people stop and talk to me about as I'm walking across to get a coffee. It's the networking area factor, for want of a much better title. And the question I've often been asked over the last couple of days is, what about the customer? Or I really enjoyed that question about customer experience. So sticking with sort of digital banking, customer experience, and Slavo, as you were saying there about, a lot of this is still comparatively new. Banking for hundreds of years, you're walking into a grand building, you talk to someone behind a piece of glass. I worked out I hadn't been into my branch for over 8 years. When
You've
I
still
went
got a branch.
I know, I was surprised. In fact, they had moved and I hadn't realised. That was the scary thing. I thought I went to go into my bank and it's now a restaurant. Lovely meal, but they couldn't help me with my credit card. But moving on, the customer experience, how key do we feel that is in terms of digital banking, about making sure you are at the cutting edge, that fintechs are pushing the boundaries of what's possible and the experience that customers get, because there's that competition. I'm not sure how far all of you can take us on that particular aspect, but how important is the focus on customer experience for all of you? Obviously, AI has a huge area on that. Olivier, I'll start with you on that.
Sure. I think the ones that have been successful until now in the fintech environment, even the let's say the legacy and big banks also, are the ones focusing on the customers. You know, if the experience is nice, you'll stick around. If it's not, they will hold you because they have your mortgage, you know, eventually, or not even. And sometimes you will end up, because people don't have patience anymore. You know, you want everything now. So at the end of the day, if you have, you know, I might have a fintech app and my bank app, you know, still the mortgage one, and the one I use for everyday payment, this is so bloody fast that I always look at the other ones like, good try, but you're still behind, you know. So I think I was saying at the beginning, the speed and everything now is really the element. So the people that are listening to the customer, that are doing, you know, the updates on the interface, because it's the app, it's also the web sometimes, or it's a combination of both, and providing the different solutions that the customer is expecting, giving him the choice. I think it's also very important. You know, you want Apple Pay or you want to pay with your own app. Which one do you trust? You trust Apple? Yeah, but I don't trust Google. Well, it's your choice. It's not my decision. So you can use this one, you can use this one, you can pay with your own app, you can pay with your card, you can pay with a bracelet, blah, blah, blah. You know, give the end user the choice and look at the numbers. For me, that's always a story. Put it out, you know, fast. That's what we do as a technical partner. And put it out fast, look at the numbers, see which one, you know, is getting the most traction.
Yeah, if you don't mind, I can add something. I think it's a new era for banking in general. When every bank was doing these loyalty platforms before, right? So you have to, they look after you, to get your loyalty back. I think it's time for the bank to be to think about this the other way around. So the loyalty now is a two-way work. It's not just the customer loyalty; it's the bank loyalty to the customer as well. It's not only about the communication, obviously. It's about the stability of the product, stability of the systems, and you name it. So it's the other way, loyalty.
I think, I think to your point, customer experience is hugely important when I can just go and open another bank account. It's going to take me 7 minutes, and I've got another one, thanks. And you
That's
thanks
too
for
long. 7 minutes.
Well, you know what I mean. But you can open another bank account. So if you have a bad experience, you simply say, "Oh, I'm going to shift to another bank." That's very easy. But I used to have this years and years ago when I first started working in FinTech, this presentation I'd give, and I'd say, well, it's all like Google, Amazon, Facebook, and Apple's fault because they've set our expectations. We want everything instantly. We want it quickly. We want it to be seamless. We want there to be no friction. And we want that everywhere in our lives. The problem is, finance is heavily regulated. You kind of want a bit of friction. You kind of want there to be extra layers in there to slow some transactions down. You want perhaps it not to be instantly for everything. So the struggle I think a lot of fintechs and certainly the digital banks have had is trying to balance the customer expectation of everything now, everything quick, everything digital, with we are highly regulated and we have, your life savings to manage. And so how do you balance the customer expectations with the kind of the safety and security, which is a huge part of the customer experience, actually, if you're dealing with a financial services company, if you are, one of those Revolut customers who's lost thousands and thousands and thousands of pounds, I only mentioned that because it was in the BBC last week, just came to mind, then your customer experience is terrible. It doesn't matter that it only took you 90 seconds to open your account and you can have a virtual card and you get free insurance, you've lost your life savings. So I think there's a push-pull on the customer experience side, and I guess actually the user experience side. But we used to have this phrase when I was in consulting, which was in finance, you can have positive friction. And that's where it makes you stop and think. It's where it puts an extra step in the process that makes you feel more comfortable. And we're going back to that a bit more. We're seeing more and more organisations starting to reintroduce positive friction, particularly as the rise of APP fraud continues. And it's the banks importantly, the banks now have to pay you back. So that's making them think more carefully about those processes.
It's amazing how that makes things change.
Yeah,
It's when you
exactly.
get the slightly apologetic phone call when you've sort of paid for something rather unusual and they're saying, oh, sorry to double check you are you. And actually, I'm rather glad because I don't normally spend this amount of money on this. Steve?
I think we're sort of one step removed from the customer journey, so I don't think I can add a huge amount more beyond what you guys have already said. But Sarah, I completely agree with your point, and having that extra layer of friction. You know, it's people want to have trust in the institution that they're dealing with, and I think that's core to providing a good service. If you can't trust the service that you're banking with, then it's probably not a bank you're going to stay with, right?
Very true. And that leads us on very nicely, I'm not sure if you can see my notes from here, to cyber security. It's almost like we planned this. For you, all the biggest cyber security threats that are facing digital banks and fintechs, what are they? And how can they enhance their security to protect that customer data, as you say, that's so important? Steve, I'll start with you on that, as you finished on the last point.
Yeah, thanks. And I think for those that don't know, CFC is our history sort of in the cyber market. We've been writing cyber insurance policies since the year 2000, so that's a real core part of what we've done, and it's a core part of the FinTech policy too. But we have the data, we know where the claims are coming from, we know what these banks are suffering, and the frequency that we're seeing from cyber losses are theft of funds and theft of data is where we're seeing the most activity. Where we're seeing the severity is actually on the ransomware side. So banks being attacked, all their systems being locked down and having to pay a ransom to kind of get things going again. And the amounts that these cyber criminals want are huge. So whilst we're not seeing lots of it, but it's definitely the most expensive and costly part. To the point on what they can be doing from a cybersecurity point of view, outside of their internal cybersecurity processes, if businesses have a cyber policy with the likes of us, we do proactive cyber, so we try and prevent claims before they even happen. We've got a whole team of individuals that are scanning the internet, the dark web, finding those vulnerabilities to stop that claim happening in the first place. And if in the event that it did go wrong, we've got a 24/7, 365-day-a-year incident response service. So insureds can reach out to us directly any time of the day, tell us something's going wrong, and we'll have people on hand to try and help fix it. Because the earlier that these problems can be solved or even prevented, the more minimal the risk is going to be.
Yeah, I mean, I'll just say that the biggest risk is people. It's not technology, it's people. It's people writing their card account, their account details down. It's people keeping their their PIN next to their card. It's people not questioning the people they're interacting with on, online sales platforms enough. Like 99.9% of the issues where you're losing money out of your account is because something that somebody has done wrong. You get kind of members of staff who are kind of trained by criminals into, giving up details. There was a case really recently where very, very clever criminals used AI to convince, I think it was a multi-million-pound payment, if I'm correct, from one of the big consultancies, because they were convinced it was the CFO they were talking to who had authorized that payment. And it's the people not asking the right questions. There are tools we can give people. There are tools we can give customers. There are tools we can give people working in banks. But a lot of the time, it's the mindset. Not to say that there aren't very, very clever technologies out there to, to hack accounts, but it's 9 times out of 10 it's the person. Yeah,
there are very, very clever technologies, but this example I always give, I was in a stationer's and I saw an actual book, and on the front it was written Internet Passwords. It was an actual book you could write all your internet passwords on. And inside the front cover it says, it's advised you don't write your internet passwords anywhere, which seemed like one of the stupidest things I've ever heard of, but it slightly scared me. Sorry, Olivier, pass on to you.
I wouldn't write anything there down, but we always end up doing it because so many passwords. So I think some of the elements that are available today, like tokenization, the schemes have a commitment of tokenizing all the information, all the patent data of the card, before 2030, 100% tokenized transactions. That means what? That means that at the end of the day, if you catch that information, you won't be able to do anything with it. Multi-factor authentication, this is exactly what you were saying. So you're creating some step up, some additional friction. You can get into your app with the login and password, but as soon as you want to add a beneficiary, you want something stronger. You want a passkey, you want biometrics, you want something strong. So that's the elements. But at the end, the biggest factor is always the right guy doing it for the wrong reason. He can pass all those tests. He will authorize the transaction because he's convinced he's doing it for the right reason, which is not the case. So that's where education is today the only answer we have. They are creating that additional friction, step-ups to do that. Multiple step-ups is one thing. I think the best the solutions we have today, and again we're just trying to keep up with the market, is this behavior management. If you see somebody that's on the phone and is doing a transaction and back on the phone, this is wrong. You don't do a money transfer while being on the phone. You don't do that. Even if your kid is asking you for money, you say, okay, I'll do it. You hang up and you do the money transfer. So that means somebody's telling you what to do. So now we are, addressing the behavior and the way people behave to see, oh, this is normal, this is not normal. He's left-handed, he's right-handed. Yeah. He's doing it while they're doing multiple things. And I think that's a bit of a slightly intrusive at the end of the day when you look at it. But also you don't know that the machine, most of the apps are now starting to do that. And as they're consolidating that data, they start to know you better than you know yourself, and they are able to stop you, like if you're doing something wrong, like a bit of the car that is, stopping you from crossing a line and so on.
I think there's a point about the phone calls. Monzo has a really neat feature, which is if somebody rings you and they say, hi, I'm from Monzo, we need to blah, 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 you can go into the app and there's a feature within the app that says, yes, we're calling you, or report a spam call. So at that time, you take the phone away from you, you go into the app and you go, oh, okay, it's not them, and you can hang up. Revolut, who I've bashed a little bit this morning, it's not my fault, they're in the news, they're front of mind. But they have, if you're making what they consider to be a suspicious transaction, they give you, I think it's 5 steps you have to go through. And then if they're still not convinced, they block the payment for 24 hours. 24 hours, yeah. So, the digital banks are introducing as much as they can to help you, avoid making bad decisions. But at the end of the day, if you want to make the payment, you'll make the payment. Yeah.
You have to look at how smart the cyber criminals are getting, though. Like deep faking is becoming prevalent in those social engineering type incidents where.
Well, that's the CFO that got Arup. That was what I remembered it. Yeah. Yeah.
So and the mutual authentication is actually one thing that is really cool. Normally, they were asking you all the last question. Can you give me the birth date of your dad and your mother, maiden's name, and so on, so that they know it's me calling. Now it's actually me asking questions to so if they're really them. This is. Where's my branch? And where's Anna? I was dealing with Anna, because at the end of the day, you don't trust people calling you. I mean, you don't pick up to start with. And if you pick up, because they actually can fake the number of your branch and so on, if you pick up, you need to make sure it's the right people you're talking to.
Well, it's funny you mentioned trust, because again, that's where I want to take things next, because it's a priceless commodity. It's a very elusive thing to say, something you build and can lose very, very quickly. Fast. How can digital banks, fintechs, anyone working in that space, not only build but maintain that trust? Slava, I'll start with you, as I sort of jumped in slightly there ahead of you. What are your thoughts on that? How can that be built and how can that be maintained?
Yeah, I think back to my point about the loyalty again, back to the user, the communication is a key here. I've got like 3 banks, maybe 4 banks, a bank account in my cards from different banks, and I don't have a regular communication with them. And I don't believe that actually, I have a lot of trust to them. I don't know why. This is just the case. But there are some banks that actually are constantly communicating to me, and I see their development. I see their interesting products. So maybe that's the case. That's the point to start with, the communication.
Proactive, even in particular when something is going wrong. I really like that when they say, oh, our system is down for 2 minutes and a half. We apologize for that. Like, they didn't even see that, but thanks for saying that. You don't want to figure it out when you're doing a transaction. So proactive communication, and you said it's building trust is over time. So a lot of those new players, are still in the process of building trust, and I understand it's very hard. The bigger names might have the trust by default, but they can fold. Everybody can fold. So,
but that's actually an interesting point as well about the proactive thing. It can be an opposite thing. It could be spam fatigue after all, right? So it's always a balance question.
It's a balance.
Yeah.
I think being in insurance, we're at the thick end of it when stuff goes wrong sometimes.
I thought you might have something to say.
Nobody trusts insurance,
But what I would say is I think how a company bounces back from an incident is where that trust can really be gained. If it does go wrong, how do they respond? How do they put the customers back to the place where they were before, and they're happy to continue using that service? So, reputational harm is a huge thing, especially when it comes down to cyber attacks. So I think it's having those. You can have the best risk management in the world, but when it does go wrong, you kind of need to get back to where you once were and just kind of give the customers the trust that they have in your brand.
I guess it kind of covers everything everybody else has said, but I always say transparency. So kind of be honest. I mean, there's certain points at which you can't be transparent if you're in banking. If you close someone's account because of suspicious activity, you can't tell them what that suspicious activity is, and people get really frustrated with that, but that's actually the regulation. Mm-hmm. So if your account is immediately closed and your bank says, sorry, we've had to close your account, they can't tell you why legally, and that's a huge problem, like with the regulation aside. But I think transparency, and I completely agree with the bouncing back point, like, my sister uses Wise. She lives abroad, so Wise is sort of her proxy bank account. And somebody got her card details and emptied her account, and she panicked. And I said, "Don't worry, block the card. Just let them know." They have an actual form, really easy. There's one button. You say suspicious transactions. She went, "Oh, this one." They show you the transaction. She went, "This one, this one, this one, and this one." 4 hours later, she had her money back. Like, it's that kind of reaction, and she's like, "Okay." If something did go wrong, but when it did go wrong, it didn't negatively impact me. Now, there's no way that Wise could have clawed that money back from the merchants in that time, but they would have looked at the transactions, looked at her spending pattern and gone, right, we believe that's suspicious, so therefore we will take that kind of on our balance sheet hit and go and solve it and, over the next 5 days or whatever it is. Yeah, customer first.
Yeah, you actually leave with a better reputation than you started
Yeah.
with. And, well, she's told you that story, and
Yeah,
you've told
I've
this
told
room full of
everybody,
people, and that's how
So
it rolls.
Wise is great.
I will come to you next about the future, looking to the next 5 to 10 years, what you think the future of digital banking will be. I'll put you on the spot for that one in just a second, but I'll come to the room next if there's any questions. We have an immediate one at the front. I do like it when people are quick off the uptake.
Thank you so much. My question to you guys, with so many things are happening and everything, transactions are coming into seconds and everything is almost done, are we reaching a point of saturation when it comes to technological advancements in the FSIE space?
Saturation. I mean, we have so much more to do and so much more to deploy at the end of the day, because some might be at the edge of the technology, but at the end you have to think about tier 1, tier 2, tier 3. Everybody has to be on board, because the fraud will always focus on the weakest link, the weakest guy. So if you know you can steal the data from these guys and you can use it with these other guys, the fraudster already know that. They're already doing it as a daily basis. I'd say fraudsters are better organized than we are. So for us, it's really about full speed ahead and deploying those different technologies, whether that would be cybersecurity, that would be authentication, that would be tokenization, all the different things that help us raise the barrier at the end of the day. There's a lot to be done still, which is good and bad at the same time, because obviously we know what works and where we need to do. At the same time, it's a heavy investment, so obviously that's putting a load they have compliance, they have regulatory, now they have security, they have customer focus, so it's a lot of places where the money is going, but quite a lot to be deployed.
Yeah, I mean, it kind of actually ties into my answer for your next question. But I think, as customers who go about banking, on a day-to-day basis, and you're in this room, so I suspect almost everybody uses an app, at the very least, even if it's not from, one of the neo banks. We think things are quite advanced, but let me tell you, when you go into the back rooms of those banks and you see what's going on back there and what's still on paper and what's plugged into something else that is stuck together with sticky tape, there is so much more to be done on the back end that will then release even more innovation on the front end. So, we may think things look all shiny, but we're not the ones sitting in the IT departments at the larger banks desperately panicking about what we've cobbled together over many years and how we replace it with something that's actually future-proof.
That really fills me full of confidence. Thank you for that, Sarah. Anything else on that?
Yeah, I think I'll just add that the fintech market itself is set to continue growing and continue, new startups are going to keep evolving. And the reasons that new startups are created is because they're usually solving a problem. We see so many new risks today that we never thought would have existed 2-3 years ago, and that trajectory is only just going to keep continuing. So I'd imagine, to everyone's point, that there's still so much more to come. We just maybe might not know what it quite is yet.
Okay. Any further questions from the room? Yep, we can do one more.
So the UK has clearly been very important in leading a fintech revolution. We're obviously seeing quite a subdued economy and a dip in investment. How do we maintain our place in the UK as a real fintech leader over the next 10 years?
Oh, the article's published next week, but yeah, I have just written an article on this. It's really difficult, right? The UK has been world leading, both in fintech, but also banking industry here. I've done a lot of work in the US, and you want to see what the state of the banking industry is over there. It's miles and miles and miles behind. I think when you look at these things and you kind of, if your question is how do we maintain the UK as a global fintech hub, it's not about the technology, it's about all the things we put around the technology. It's have we got the right skills, have we got the right people, have we got access to the right markets? Because at the end of the day, you need funding, and you're only going to get investors funding the brilliant new fintechs and ideas if those fintechs can thrive and succeed and grow. As one of the things we do at FinTech Wales is our mission is to help fintechs grow in Wales. And at the end of the day, it's skills and funding, funding and skills. And there are lots of different ways to unlock those two things. Some of them are regulatory, some of them are government-backed, some of them are kind of innovation-based. But I would say those are the things that we really need to keep our eyes on if we want to maintain and, in fact, grow the position. Because we're lucky. We haven't lost it yet. We maintain the leading European market when it comes to fintech investment. But I would say we are in danger of losing it if we don't get our heads together around all the stuff that needs to go around the amazing ideas and technology that we have.
Yeah, maybe I would just add, there are, in my view, just 4 to 5 maximum centers of the fintech. UK was always number 1. Singapore, Hong Kong are number 2 and 3, and maybe San Francisco, okay? Like these 4. And you always see that the fintech startups are flowing, let's say, from one to another from time to time. Depends on the regimes, depends on the new things that these markets implement. And I believe that the key of the success here is talking to what Sarah says, talking to the community, supporting them, and making the ecosystem, for them supporting rather than killing. That's the key.
I think ecosystem is a good word, yeah. I think one of the recipe, obviously, I used to live in Paris back in the day, and Paris is trying to catch up on London, obviously. And one of the recipe they was creating the station to have, ecosystem where they all gather, they all, can talk to one another, and because it's at the end, nobody's able to solve everything. So it's really one of the beauty of the fintechs is they're working together. So much better because API connections, because being in the same trend and so on. Sometimes with solving the same problem together. Where the banks have always been, side by side. It's very rare you see actually they are. Recently they start to share data. Oh, that's good move, guys. If you want to solve fraud, you need to have the global vision and share data. Anonymize data, but share the data. So if you have a fraud problem, you can share it with the other guy, and he can solve it, and vice versa. So that's the ecosystem for me is very important. That's why always, for creating that condition, funding is good. Skills you can fund it anywhere now because they're all global companies. Most of these fintechs. So
well, only if you can hire them.
Yeah,
and that's
the funding.
Yeah.
Skills and funding, funding and skills. Yes, let's keep repeating that mantra. We are basically out of time, so I'll go to that final question. And as you can see from the timer, we are running out of time quite rapidly. So just in 30 seconds or so each, one thing to look out for in the future. How do you see things evolving in the future of digital banking? So just in 30 seconds or so, apologies. Steve, if I can start with you.
I've got quite a few, but going first, I won't steal them from the rest of my panel members. I think consolidation is the one big thing that I'll mention.
You took mine one.
I already said it in my first answer.
Yeah, well, to that point and to your point, there's just going to be so many services contained in one app from one bank, and that's only going to keep growing. Yeah. So consolidation would be my number one.
I think it's going to be the survival of the fittest, right? I've got 7 bank accounts right now. Do I need those 7 bank accounts? Do they do anything particularly different? Tell you what they do different for me, interest rates. When interest rates sort themselves out, I think we're going to see quite a few services, whether they are actually banks or whether they're e-money providers, drop away.
Since you guys covered the main one that says still deploying the technology, coming back to the question from the panel, it's really... we have the tools nowadays to be able to raise that barrier. We have the tools to make a better experience, to make it more secure, to make that nobody can steal your card details anymore. The tokenization is meant for that. So if we could deploy that to the whole ecosystem, and as I said, the schemes have a date of 2030, so we have 5 years to do that. that will solve one problem, not all the problems, obviously, but at least we could get, start to bring the other technology that we have also in the back to do more risk-based, to do behavior, to do a lot of other things. So we have to, tick the box. We know the things that the weakest point. Again, survival of the fittest. We know the weakest point. If they don't tick the boxes, they might fall into the hole one day. Yeah.
I would only add globalization. Maybe it actually goes hand in hand with consolidation as well, especially in this coming recession that everyone is talking about right now. Like if you take this example of Nubank from Brazil, 105 million in few years of people in Latin America is fantastic result, but they are still hungry. They want to go more, and I believe that they will go global, and these kind of companies will go global, acquiring other companies, because it's a disadvantage nowadays to go acquiring your own license. You have to consolidate with someone. So, and that would be the globalization through consolidation, or maybe the other way around. That would be the key in future.
Okay, we've covered an extraordinary amount over the last sort of 40 minutes or so. So Steve, Sarah, Olivia and Slava, thank you so much. Really enjoyed your company, and thanks for joining us here at FinTech Live London 2020.
Thank you. Thank you.